Okay, we have another guest who joins us now. Ambareesh Baliga of Edelweiss is also with us. Ambareesh, hi, good morning. Do you also concur with Mr. Bhatt's view that perhaps we've not seen the worst just yet and September could also be a difficult month?
Absolutely. I mean, this is what I've been saying for a while, that whenever you see a bounce back because of, we have seen the rupee appreciating a bit, and because of which we saw that bounce back yesterday. But then I don't think such bounce backs will last too long. And the way I see it is, top for the market should not be more than 5,500, 5,550. So any decent bounce back like this should be utilized to exit to a large extent. Because clearly, we have a crisis on hand. I don't think it's crisis-like situation which people have been talking for a while. We really have a crisis on hand. And we have lived in denial for too long. We have not really looked for any solutions, but we have looked as to whom to blame. And that's, that's what has been happening for quite a while. And again, looking ahead, we see inflation shooting up, input costs going up. I think we are looking at more of stagflation going ahead.
Mm-hmm. Yes, certainly those words now come back into the radar. But Mr. Bhatt, what is a place to hide here? See, there are mutual funds with money and perhaps even individual investors. Is IT a place to hide?
Well, if you have to be in stocks, I think IT is probably one of the very few places where you can hide. But you really don't have to hide in equities at all.
But there was a dramatic outperformance in the late 90s where not hiding in ITs would have actually been expensive. It was the best return.
Yeah.
Do you see that outstanding returns coming from IT?
Not really so very outstanding. It's just a reflection of the weakness of the rupee, and it's not as if their sales would dramatically improve in US or in Europe. It is just that there would be a small interregnum before which their customers will start talking to them about changing the pricing. But till then, probably a quarter or two, I think this sector could be the best place to hide.
So for an Indian, it's fixed income?
It is a short-term fixed income, not really long-term fixed income. Short-term fixed income and probably IT.
Okay. The two big triggers in the month of September, Mr. Bhatt, are the Reserve Bank policy and the Fed policy. Which one do you think will assume more importance for the market, and the outcome of which event could really change sentiment in the market, if at all?
Well, I think even RBI has virtually changed the date to see what the Fed does. I think the big, the starting of the tapering in September, that is the big announcement that everybody is expecting. If that happens, I think that can unsettle markets quite dramatically, because even today there is hope against hope that it will not be September, it will be extended a bit further. And I think RBI will position itself based on what Fed says. So I think there may not be a lot of comfort from both these meetings, I think.
And incidentally, that is not confirmed yet, Mr. Bhatt, the change of RBI date. It's speculated, not yet changed. Thank you very much for joining us. Ambareesh, I wanted to ask you more about today's trade. The land acquisition bill is 50% passed. Do you think it will have immediate stock-wise impact? Should we understand it as having a bigger impact on any real estate stocks? How should we understand its stock market impact?
No, I don't think it will have an immediate impact. I think it will have a much longer term impact, because immediately, you really don't have too many of the companies really going in for expansion. You don't have too many of these real estate companies looking for more land bank, because I think most of them already have decent amount of land bank. And looking at the slowdown, I don't think anyone is really looking for expansion, immediately. So because of which I don't see an immediate impact. But yes, longer term, if the economy has to grow, you clearly require more land for industry as well as real estate. And that is when I think we will really face that problem.
What are the domestic guys doing at this point, Ambareesh? Because the domestic institutions that we've interacted with indicate that there is some buying that we're seeing, especially in spaces like financials, etc. Are you noticing any accumulation at lower levels in any of these spaces?
No, we are not really seeing too much of buying happening at those lower levels. Whatever buying we are seeing is more from a trading point of view. I don't think people are really looking at going for long-term investment at this point of time. Clearly looking at the sort of volatility which is there, uncertainty going ahead. I don't see too much of investment buying right now. It's more of speculative buying.
How are you looking at CESA? It's a new fish in the pond in its new avatar.
Right. I think that's one area and one stock where possibly there is a hope going ahead with the mining ban hopefully getting removed across. And I mean, especially with the way the rupee is going, I think this is one sector which will possibly, I mean, get the full benefit because the input costs don't really go up in tandem.
Okay. What about a stock like JSPL? Talks of the buyback today. How would you approach that name?
In fact, I've not really followed that stock very closely, so it's a bit difficult for me to really comment on that.
The metal space itself, I mean, not JSPL for its specific news, but how would you approach it otherwise, say, Hindalco, Tata Steel?
I mean, metals, in fact, I was expecting the cycle to improve possibly over the next 2 quarters, but then I think that's happening slightly earlier than expected. And in fact, I mean, I would surely utilize the next dip as an opportunity to get into metals because clearly with the European economies and US improving to a large extent and also China showing some signs, I think the metal space should be a space to look at going ahead.
Do you look at Nalco very closely? I mean, did you see the rally in Nalco yesterday? I mean, it used to be an ignored metal stock, Ambareesh. Have you looked at its numbers and would that be one of the stocks you look at?
Absolutely. I think when you have a fresh bull run starting in any sector, you'll normally see the ones absolutely ignored. I mean, they are the ones which will give you the maximum alpha, but that does not mean that they could be the safest stocks to be in. But surely, I mean, from a portfolio angle, I mean, that gives the maximum alpha. But at the same time, I would be more, I mean, confident or feel safe with stocks like Tata Steel and Hindalco.
Okay, Ambareesh, stay on. We have many more stocks to discuss with you this Friday morning. Let's take a break on that note. But in the meantime, here are some trading ideas to watch for in Super 6. We'll come back.
My first pick is Century Textile. It has formed a bullish candlestick pattern on daily chart with volumes. Hourly momentum has entered into bullish zone. I recommend a buy with a stop of 209 for targets of 219 and 224.
The first stock that we will recommend is a buy call with regards to Bajaj Auto. The daily chart structure of Bajaj Auto shows a downward sloping wedge pattern. The breakout of this pattern should lead to significant upside in the next few trading sessions. Buy the stock above the levels of 1760. Place a stop loss at 1710 and trade bullish for a target of 1840 or higher levels in the next 6 to 8 trading sessions.
Our first recommendation is buy on Godrej Consumers. The stock has staged a strong reversal from the neckline of its bearish head and shoulder pattern. Now this negation of a bearish pattern is going to provide strong momentum in the counter in the near term. Also the stock has taken support at its 200 moving average. Now buy this stock above 815 with stop loss of 790 for a target of 860 to 870 in next 4 to 5 trading sessions.
My second pick is Wipro. It has closed above the important resistance of 470 on daily closing basis. I recommend a buy with a stop of 465 for targets of 485 and 495.
The second stock that we will recommend is also a buy call with regards to KPIT Cummins. The stock has been in a very strong higher top, higher bottom cycle over the last 2 months, and going forward, we expect significant upside in this counter. Buy the stock above the levels of 136, place a stop loss at 128, and trade bullish for a target of 145 over the next 4 to 6 trading sessions.
Our second recommendation is HUL. After going through a sharp correction of 20% in the space of last 1 month, the stock has found an intermediate support around 580. On multiple occasions, the stock has staged a pullback from these levels. Now after a period of sideways consolidation, the stock is attempting to break out on the upside. Buy above 598 with stop loss of 580 for a target of 640 in next 7 to 8 trading sessions.
Hi, welcome back to the show. About 20 minutes and we'll get the opening rates on the screen. I would be more interested to see how the rupee opens up today after that sharp pullback that it saw yesterday. So maybe that 66 level might hold on the rupee today as well. But we've been speaking with Ambareesh Baliga of Edelweiss Financial Services. Ambareesh, how are you approaching a stock like Tata Motors now? Yesterday there was a massive upgrade that came in from Barclays with a target price of 368. In a market like this, do you think it's better to put your money in some of these names that have been resilient and have been performing well in the past?
No, in fact, we are still a bit worried about the India story as far as like Tata Motors go, although most of it is GLR. But still, I think the India story will drag it down to a certain extent. And although it's held on at these levels for quite a while, in fact, we don't see too much of an upside immediately. So I'll really not invest at this point of time in Tata Motors.
You know, Ambareesh, we've seen decent amount of pullback in those gold companies, Muthoot, Manappuram. Is there a comeback in those stocks?
Basically the gold prices have surely gone up. I think because of that, the asset quality, surely would have improved to a certain extent for most of these gold companies. But then still, the business model is still a suspect, and because of which possibly, I would surely utilize this opportunity, this move up in both Muthoot and Manappuram to in fact exit to a large extent.
All right, two more guests join in on this conversation. Amit Trivedi on the futures and options side and Ashish Tater as well to give us a couple of ideas in trade. Gentlemen, good morning to both of you. Amit, first a word from your end after seeing the way the August series had almost 9% fall in the Sensex and the Nifty. How are you entering into the September series?
Yeah, hi, good morning. So what we are seeing is, if you look at global markets or global economies, especially if you look at US or Japan or Europe, they are improving. If you look at emerging nations like Turkey, Brazil, Indonesia are raising rates. So competition is increasing for capital, and that will pose its own challenges for India, we feel so. If you look at the next month, you have a big event on around 18th of September with the Fed deciding on the taper amount. That is keeping the volatility high. In fact, volatility is back in markets, and it is here for some more couple of quarters to stay. Plus our own growth is slowing down. So all these put together, we think markets will be quite choppy in the month of September, and you can have a range on the lower side as low as around 5,000, 5,050, and on the upper side around 5,600, 5,650 kind of levels.
Okay, Amit, what's the sense you are getting about the metal stocks? Is there anyone in which you have a strategy?
Yeah, so for example, if you look at Europe, as I was mentioning, that is an economy which is improving. So for example, Tata Steel and Tata Motors, both we like from that sense. So for Tata Steel, one can go for a ratio trade, which is one can buy 270 strike calls in September series and sell 2 quantity of 300 strike calls. So there is a net investment of 4 rupees in this strategy. So you will make profit if Tata Steel remains any value above 274 and 326, which we feel should be a reasonable level to play for.
Actually, Amit, how will the September series itself pan out? Do you think, are we starting heavy, or do you think there will be short pressures because of short rolls? On Nifty and Bank Nifty, how do you see at least the first week progressing?
Yeah, so if you see, in fact, we are experiencing record turnovers on markets. So we think the series seems to be quite heavy in that sense. So we need to see how it will plan. But what we feel is, at least for the next few days, you may not go anywhere. You may have a sideways kind of movement, which is like one day you may move 1.5% up, and next few days you will kind of give up those kind of gains that you have. So at least for the first week till around 10th of September, we think market should be slightly stable and range bound kind of a thing. But action will start as you move towards the 18th of September event.
Okay, Ashish Tater also joins in to talk about a couple of stocks. Ashish, hi, good morning. The stocks that have been in the eye of the storm are some of these oil marketing companies with crude inching higher and the possibility of higher under recoveries as well. But you still like HPCL and you recommend a buy there?
Yes, Sonia. In fact, when there is trouble times, then only you try to find stocks which has deep value. Now we have tested even 147 on dollar terms for crude, and even if I equate that with the equation of rupee dollar terms, still there will be a savior because it's a government PSU. So from that angle, if the weighted average mean for last 4 years has been somewhere around a 250 odd mark, and we feel that this will definitely stabilize around that. this is a short-term bet that we are taking on for a target of 185 and 210, because September 5 or September 6 we expect there will be a huge chunk of move from diesel perspective of to the tune of 4 to 5 rupees, which will see OMCs set on fire, and IOC, HP and BP will be in this particular area, which will have definitely lot of buying attraction, and that's why we are picking this stock.
Achha. Ashish, for a simplistic interpretation, after the land acquisition bill, I think real estate stocks will be in focus today, though they are not the only ones affected. In any case, you are in any case fond of Anant Raj. Can you take us through the argument?
See, Lata, the logic here is that Anant Raj is spending lot of time between 50 and 80 rupees, and this has been a pick that every time you find the stock around at 45-50 levels, you should be buying, hold it for a year. Every year it is giving you that similar kind of pattern, and every time there is a positive, because it holds large tract of land, which will definitely see lot of momentum. Now Purvankara and others will get affected because they do not have that huge land parcels, but something like RIIL or even Anant Raj, or for that matter Jacob, will definitely see lot of momentum in terms of positive attraction. So we have a target of 65 from medium term perspective on this stock.
Amit, are there significant shorts still built up in the banking space? And if you had to give us one strategy on any individual banking stock in the Nifty, what would it be?
Yeah, we feel banking would definitely underperform markets going forward, at least in the next couple of months kind of a scenario. Predominantly because what RBI did on July 16th has shaken lot of the banks in terms of it has choked some of the volatility, some of the liquidity that they were having. So we think stocks should underperform. In fact, for banks like ICICI, we have a trade. One can buy 900 strike calls and sell 2 quantity 920 strike calls. So you are getting 4 rupees cash inflow, which is 1000 rupees of cash inflow on a margin deployed of 40,000. So 2.5% returns if ICICI remains any value less than 945 rupees, which is like close to 15%, 20% from current levels.
Okay, and Amit, ONGC, another stock with such a huge fall in the last, say, 12 to 16 weeks. How would you approach that one?
Yeah, so similarly for ONGC, we think these stocks should underperform given the way there are concerns about the fiscal and other budgetary issues with respect to Government of India. So there will be very little that you can do in these kind of stocks. So we think the stocks will underperform. So one can go and sell 310 calls of ONGC because of higher implied vols in the market. Stocks like ONGC are also trading at higher implied vols, and you are getting around 1.3 rupees as option values. So you can sell them. You will make losses only when ONGC goes above 310 rupees, which is like close to 20% from current levels.
Okay, stay on guys. We'll just get a quick handle on what's happening in the markets in terms of individual stocks as well. Rima and Pragya both join us to give us the top stocks in focus and what brokerages are saying. Hi guys, good morning. Rima, let's start off with you. What are you watching for on the stock radar?
Thanks so much for that, Sonia. First, just keep your eye on financial technology as well as MCX. Now, reports suggest that Indian Bullion Market Association, or IBMA, which is sort of a group company of FT because it's promoted by NSCL as well as the bullion dealers, has been found trading in MCX, which is in violation of government guidelines. So this is what reports are indicating. Keep your eye on JSPL as well. There is a board meeting scheduled today where they will be considering a buyback of shares. A few earnings came out overnight. So one of them was rolled up, disappointing because the company has changed its depreciation policy, on account of which they've reported a massive loss of 1,050 crore. So watch out for that. Keep your eye on Elder Pharma as well. That one has come out with a weak set of numbers. In fact, their profits have declined 95% on year-on-year basis to come in at just sub 1 crore versus about 18 crore on a year-on-year basis. This is led on account of close to about a 50% decline in sales on a year-on-year basis and an 80% increase in their finance costs. Lastly, Shriram EPC, the news over there is that they have okayed a 200 crore cumulative redeemable preferential shares and a 100 crore optionally convertible debentures. So some fundraising in store for this company. With that, it's back to you all.
All right, thanks for that, Rima. Pragya, you tell us, what are brokerages saying they will buy or sell today?
Well, I have a lot of brokerage calls today. Let's start with TCS. CLSA has an outperform on the stock with a target price of about 2200. They believe the stock actually remains the best medium to long-term play as far as the IT services are concerned. With the scale and the innovation that they have in delivery, should help the company maintain its sector-leading margins and the premium valuations that it currently commands. Credit Suisse on ITC, which they believe is their top pick in the FMCG space. They have an outperform on the company with a target price of about 385 rupees. Credit Suisse says that ITC's share price correction has brought the PE in line with its 3-year average. However, if you see on a 15-year average, the PE is actually still ahead of that 20 times that the stock is typically used to trade at. However, they believe that the current higher PE is actually deserved given the kind of business mix improvement and the free cash flow generation which the company has given, and they believe the company will continue to deliver 18 to 20% earnings growth. Deutsche Bank on Maruti, they've however cut the target price by about 14% to about 1450 rupees. They've also cut their FY 14 and 15 volume forecast by about 3 and 7% respectively to factor in the rupee depreciation. They believe that while the demand recovery in the entry-level cars is working in Maruti's favor, however, the market share gains are of course being offset by the overall weakness in demand that we've seen in the industry. Bank of America Merrill Lynch on Eicher Motors, they have an underperform. They've hugely cut their target price. Now what they're saying is that despite 20% correction that Eicher Motor has actually seen from the peak levels, the valuations still do not appear attractive. They've cut their profit forecasts basically to reflect the muted recovery in the truck segment, which the company is seeing, a slower ramp up in the engines business and the lower margins in the Volvo Eicher JV. Morgan Stanley quickly on Tech Mahindra, they have resumed their coverage with an overweight on the stock, target price of about 1650. They believe the revenue growth over 2 to 3 years could surpass their and the street expectations, and TechM could actually trade at mid-teen multiples going forward, and the re-rating expected to continue in the stock. Finally, Morgan Stanley on Dish TV, they have an overweight. However, they've cut their target price to just about 54 rupees from the earlier 88 rupees. While the company remains a focused player in the DTH segment, the massive depreciation that they've seen in the rupee and the lower customer additions, they've actually dampened the sentiment for the overall industry, and the massive stock underperformance is what they're recommending to their investors as an opportunity to buy.
Slightly surprising. Thanks a lot for that. But slightly surprising, isn't it? So many buy calls today in a market which is riddled with so much of uncertainties, and only 2 of them are tech stocks where you would normally expect people to be a little bold.
Well, Dish TV has a really low they've slashed their target price a whole lot, so that's of course one stock to keep watching for. But I want to ask you about the rupee. We'll do that in a bit. We'll first take a short break. We'll be back just in time for pre-opening.
MCX Stock Exchange, India's new stock exchange, presents Bazaar Morning Call.